Never run out of battery again with the INIU portable charger, the slimmest 10,000 mAh power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Microsoft Sphere, your guide to tech insights and analysis. Today we're talking about a surprising move from top analyst Paul Chu of Phillips Securities. She's downgraded Microsoft stock to hold from buy. That's right, folks. The AI-driven cloud giant has been on a tear lately, but now some experts think it might be due for a correction. Let's dive into what's behind this downgrade. So, Microsoft has been riding high on its Azure expansion, and that's been driven largely by demand for large AI models. And Chu is convinced that this trend will continue, which is great news for long-term investors. But with recent gains in the stock price, she thinks it might be getting a bit too hot to handle. The stock has already gained 10% since its fiscal third-quarter earnings report, and Chu wants to make sure we're not overlooking the fact that there might be less upside from here. Now, this downgrade isn't a reflection on Microsoft's overall potential. Chu still sees plenty of long-term growth ahead. She notes that the company's strong cloud-based business, broad enterprise customer base, and less susceptibility to tariffs all play in its favor. And with a $480 price target, which represents 10.27% upside, she's still optimistic about where Microsoft is headed. But Chu isn't alone on this. 4 other top analysts have given MSFT stock a buy rating. Andy Yu from DBS cites strong market position, AI investments, and Azure growth as key drivers of the company's success. And with its cybersecurity dominance, cloud expansion, and Activision acquisition supporting long-term upside, it seems like there's a lot to be excited about here. In fact, Microsoft reported strong performance in Q3, beating estimates and issuing an upbeat outlook. The company's cloud computing platform, Azure, showed continued revenue growth, which is a big deal for anyone looking at the tech landscape. And with plans for sequential increases in capital spending, it seems like Microsoft is committed to expanding its AI and cloud infrastructure. So what does this mean for MSFT stock? Well, on Wall Street, the consensus rating remains strong buy, based on 30 buys and 4 holds assigned over the last 3 months. The average price target stands at $506.31, which implies a 16.32% upside potential. That's still plenty of room for growth if Chu is right about where Microsoft is headed. Microsoft Sphere will keep an eye on this story as it continues to unfold. Thanks for joining us. We'll catch you in the next video.